Good morning, gang. What's going on, family? Well, bottom fell out of Cosby today. I am proud to say that at least our deep dive gave us a good week and a half, 2 week heads up. NASDAQ is breaking levels. ES is getting to the point where even it doesn't believe it's going to have a new all time high. And today we got a FOMC meeting. Hate to say I told you so, but there were signs. Let's get rid of this. Man, what time is it? 12:30. Not really expecting any huge surprises. What I am expecting is a very intense press conference. So for the next little bit until FOMC starts, we are going to have some positioning plays going on. Remember, market maker will clear the books today. So any moves create big candles, which leads to volatility. So be careful, leverage positions, keep them tight, protect yourself. Vector gap got taken, to the least. I would say come here, H, but maybe not the best idea. So we figure out why this thing's following you around. I expect Saudi Arabia to get more aggressive during this war. They've already broken ties and they've already decided that they're going to pull as much oil as they can out of the ground. But for that, they need to be able to move it. And to be able to move it, they need that straight open. enemy of my enemy is my friend type shit. We are unfortunately underneath both of our point of controls. Right. Remember what's so important about this 6-4 area is that our two major visible ranges that we're in both have their point of controls at that point. Right? And we know that when we lose point of control on a value area, we seek out our value area lows. Right? Both of our, what the hell is wrong with my chart? You done? Okay. First value area lows at 624, second value area lows at 608. Only thing holding us up at this point is what we've been talking about this whole time is demand zone. Right? This SR flip that's running at 627, 624. Yeah, I slept good. Actually woke up at like 9 or 10. Well, I woke up at 9, went to the gym, back home, 8. For me to get up before, for me to be up and active, meaning online before 12 is rare. But for me to have eaten already before 12 is like super rare, bro. I never have breakfast. The first meal of the day is usually like 4 o'clock. Like intermittent fasting, but everything in moderation, including moderation. Right? Just as a quick reminder of where we are right now, because I know that we have got tons of lines on the screen. Don't blame me, blame the market maker. So we're currently hanging out. And the measured move for breaking that. Why am I, what you call it, keep doing this? Be great if you could stop that. So if we're going through original, right? Our original, we've been falling, which we are pretty close to breaking at the moment. Nico line chart. Right. So original, right? As far as our original measured move, let me pull all the actives so that you understand what the issue is. Right. And pattern hasn't broken out, failed to invalidate. That brings us down to 61. Measured move from the channel, basically the same, right? That breaks 60. And I'm being conservative. I'm not pulling the entire flag. Right? I'm being conservative because of the deviations. Now, it wouldn't be wrong to pull the whole thing, but we have measured moves already that take us down lower than that, so it's not important. But this is just a sub. This is just a sub pattern. Right. That's the main pattern. This is just to play out. Now for this, we will pull the whole measurement. That brings us down into our ranges. Time wise, price range wise, that's what I'm looking at. Doesn't seem so crazy anymore, does it? Big gap in the VPVR to get us there. It makes sense. I always ask if it makes sense because it's important if it makes sense. If it doesn't make sense, it's important to let me know it doesn't make sense so I can explain. But bear markets last 365 days on average. We topped October 5th, October 6th. That gives us a bottom by date of October 5th or October 6th. There's really not a whole lot of crystal ball involved with the time, just respecting the cycle. Just a good, healthy respect for the cycle. Yep. We're expecting more than that. Guys, Bitcoin only has to get down to my levels, right? I've been looking at. Right, just to get to the first level. It's 22%, 23%. It's 40% to get down to 38. This is ES and NQ. Right? They're just starting to go. Remember I said when both ES and NQ break this line, BTC drops to low 50s. I'm still sticking by that. When they both break this bottom line, which is their major resistance or their major support, I think that's when we get our bottoms on Bitcoin. Right. So for anybody that thinks that Bitcoin can't drop 22%, I would love to know what they think is going to happen to Bitcoin when NQ drops 11%, or when ES drops 16%. Will anybody here think that ES can drop 16% without Bitcoin dropping at least 20? Now, my limit for what Bitcoin can do during the day, not my limit, right? But one of my rules is that Bitcoin can drop $10,000 or go up $10,000 in one day without it being an anomaly. We've seen it happen before. 64 to 54 can happen in a flash. South Korea was the domino, guys. We did who was here for the deep dive on South Korea when they first had their drop? Right. The whole point of the deep dive was to say that this was the canary in the coal mine. Right. The Kospi, because of Samsung and Phoenix, are the canary in the coal mine. The only reason that the Kospi was so high because the leftover money that we had from our circle jerk, from our AI circle jerk over here, we were using to prop up Samsung and NQ. I mean Samsung and Phoenix. The lack of money from us going into those projects to keep that up was the canary in the coal mine, right? That's the first domino to fall. That's the first sign that lets you know that that circular economy that we were running over here was running out of bread, right? Because the excess that was coming out of that to pump South Korea is gone. $10,000 in any direction. You guys can pick. I mean, yeah. Just hedge against being wrong is my only advice. Let's go check it out. Got a couple order blocks to get through. These guys got scared, huh? What happened? Don't want to buy the dip no more? You wanted to buy the dip when it was going up. What happened? Bro. Bro, we brought that shit down to 40. I got it down to the minimum. I don't see a single person trying to stand in the way of this.
I shot it.
What?
I shot it.
Yeah, this is bad. This is pretty bad. You got to bring that shit under 300 just to get some orders to light up. $500 Bitcoin at 62.7. Interesting. Damn, I hope we're not that close to the sun. We got bigger problems. All right, let's Trump administration bans new humanoid robots from China. Interesting. Any of you guys that were planning on buying Chinese robots are shit out of luck. I'm not gonna lie, some of those shits look good. Some of the Chinese robots look crazy. All right, let's take a look at metals. Remember this rotation, in my opinion, like I've been saying for a minute, goes into gold and silver. Then it goes to us.
Can you repeat that again, please?
Said I think the rotation
About
goes into gold and silver, and then it goes into us.
then to us to Bitcoin.
Yeah.
What's the timing on this?
I will let you know the second I know. Oh, did not pop up, still holding its SR.
Are you talking after Bitcoin bottoms?
No, I'm talking about like now when legacy goes down. It's the same thing I've been saying for months.
Hey, I'm just thinking bigger term. The November and all that.
No, I'm talking about immediate rotation. What we're talking, where the money's going to go as legacy comes down now.
Okay.
This is gone. And we already played the breakout of that. We already played the breakout of that flag. But this SR is holding together. Where's silver at? A second. Same deal. They're both holding so far. Could basically add another one of these lines down here. Right on this SR. That's about how that's going to play out. War continues. We seek out new highs again. peace talks succeed, which by today's news and yesterday's news doesn't seem very likely, then we'll break and gold will continue to come down. Same sort of deal for silver. Give me 1 second. You know how that works, Hoover. The best way to keep somebody from doing something unsafe is to blow them up. Why did you fire on our vessel? Well, because you were on an unsafe path and just trying to protect you with rockets. Still got a little bit less than an hour until FOMC comes out. As soon as FOMC comes out, we'll look into the minutes. We'll break it down before the press conference even starts, so we know what it actually says versus what Mr. Tarantaran's going to say when he gets up there.
Why do I feel like we're going to get a nice little move down before?
Possible. I expect volatility and all the way up until order books are dead right now. So all it takes is people feel like all it takes is some active buyers and sellers at this point.
Yeah, as soon as I see a real good move down, I'm going to close my shorts out and go sideline. And if I see a real good move back up, I'm going to put it back in.
Try not to feel the urge to catch every penny of volatility that happens today.
Yeah, I've been in this trade for days.
It's cool how deaf. I'm sure your mom and your dad understand. They've probably been telling you the same shit I've been telling you for the past 17 years of your life. I know they're on my side. Nah, he's good. He's going to be on his best behavior today. If we raise rates, hard dump. If we cut rates, hard dump. If we keep rates the same, volatility. The reason I think it goes bad, whether they cut or raise, is because the market doesn't react well to surprises. If he cuts in this range, the market loses faith in the Fed. Right? That's not good. Money gets pulled out of the market at that point. If he cuts, people are like, he's just Trump's puppet. The Fed has lost its independence. We can't trust them. And shit goes bad. If we raise rates, excuse me, with the inflation that we're having now, and the fact that nobody's priced it in, shit goes bad. So basically, our only choices are a pause with dovish speak, which gives us volatility with some upside, and a talk with hawkish speech, which gives us volatility with some downside. Yeah, if I had to put money on it right now, it'd be no change. We talked about it in the deep dive. It's really a lose-lose. No change is the only viable option that doesn't immediately light a fire in the Fed. It's also the irresponsible thing to do. If we want to talk about the responsible thing to do, if we had a truly independent Fed, right, that just played by the rules and did what it had to do for the economy, we'd be raising rates 1,000%. We'd have a 0.25 or a 0.5 raise hike. But we don't live in a world that works like that. Another thing, if we were going to raise rates by today, like if today was the day that we raised, then give me a second. We'll go check to see what Nick is talking about on Twitter to see if he said anything that I didn't catch today. But if we were raising rates today, being as this is the most leaked piece of data in Washington, we'd be up higher than 33% by now. If I would have woke up to like a 45% or something here, I would be a lot more inclined to think that that they're going up. Governors all know what's going to happen already, right? And there's tons of them. It's not just Warsh. This is usually the most highest paid for piece of data and highest leaked piece of data in Washington, which is what freaked everybody out when Citadel came out and said that they think that they're going to raise rates, because Citadel is exactly the type of corporation that pays good money for that. Let's go see what Nick the Snitch is talking about. Anybody doesn't know who we're talking about? It's our guy right here, Nick Timros, the Fed Whisperer. One hour ago, former senior Fed advisor John Foss says he thinks the Fed will not raise rates today because he agrees with FOMC vice chair that the possibility of earning a credibility dividend by choosing to deliberately surprise the market will not play a role. This is what I mean by Nick the Snitch. Right? It's always FOMC day, always before the meeting, and always answering a question that everybody's thinking. And his accuracy percentage is, let's just say, better than it should be. Remember, the Fed doesn't like to surprise the market. If the Fed surprises the market, then shit goes left, goes out of their control. They don't like that. Right? So they won't ever tell you exactly what's going to happen, but they usually leak that information. It's meant to let that information soak into the market and people react to it slowly instead of having the entire market react at 2:30. Yeah, so his tweets are important. The questions that he asks during the FOMC are important because those are just given to him by the Fed. Like, I don't think that man's ever written his own question. But for that job, he gets information. Everybody's watching his Twitter. He always gets called on in FOMC. Right? It's a decent deal as a reporter if you can take it. If you can get it, I mean. Yeah, once we pause and the uncertainty is done, then market maker will fill the order books back up. Doesn't mean he'll pump price, right? But he'll go back to playing the game of getting paid off of the spread in the order book. This isn't special to just today, right? Market makers clear the books on FOMC days on all FOMCs. That's why we see the volatility we see, right? That whiplash that we get, that whipsaw action is active orders coming into an empty book. It is going to be interesting to see those press questions start to change as they start to flip long eventually. So they've been short the entire bear market, bro. You can tell by their questions that they've been short the entire bear market. Damn, this is one of the times that I miss being in New York City. Summer in the city is so dope. They Jordan is having the one tournament. I don't know if you guys know what this is, but Jordan comes out and does a tournament in New York City every summer. Schools, neighborhoods put their best teams together. He's basically looking for like the best player in the city. But yeah, it's just one of those traditionally fun times in New York. There might be a chance that I take my vacation and just go to New York. FOMC minutes come out at 2. The meeting's at 2:30. Let me go check on a couple things. $50 micro strategy. How we feeling? Better question. Who's not picking up micro strategy at 50 if it gets there? Like who's just thinking, nah, this whole Michael Saylor thing was just a fluke. Market will react before, during, and after, Bjorn. We were saying yesterday the best way to deal with these type of days is remove leverage and protect whatever gains you have by moving up stops. Oh, I'm not getting rid of, bro. There's a good chance, Scotty, that I might buy my first share of MicroStrategy before I end my short. Might actually start DCAing while I'm still shorting. But I am in no rush to I'm in no rush to get out of that short. This thing has been treating me very nicely since November. We had one sketchy moment in here, but luckily my squiggle kicked in. Golden pocket is basically 50. My bad, Mike. I got you, bro. I don't feel that way at all. I was just bandwagoning. Gotta understand. All the FUD was helping my short, so put you up there. You're good, bro. Put you up here next to your targets for next year. Yeah, I mean, I'm just trying to think in my head what happens to MicroStrategy if Bitcoin takes another 20% drop, or when. And this inability to get above that SR again has got me feeling real comfy in my short. Can actually adjust this a little bit. Let's get accurate here. Let's get a little degree of accuracy here and stop playing. And then another question is circle. What's sketchy about circle, the reason I've been DCing in a circle is because the Clarity Act, you know how I say, like, if the Clarity Act passes, I don't expect anything crazy. Okay, that's not the same for circle. If the Clarity Act passes, circle's going to catch its bottom, in my opinion. Right? It's the sketchiness of what's going on exactly, and the banks fighting over the damn yield and all of that bullshit that has given us this sort of uncertainty, right? But the second that we have some clarity, no pun intended, second that we have some clarity on clarity, I'm loading up on circle. STRC was a really stupid idea to keep people from selling off during the bear market. Really stupid. I mean, it's going to work during the bull, right? During the bull, STRC will have no problem paying out its dividends. But you should have launched that during the bull. You know, Michael Saylor's main thing, the main issue I've always had with him is that he won't admit to a 4-year cycle. As smart as he is and as much as he knows about Bitcoin, he never admits to it being a bear market when it's a bear market, ever. And it's because if your company, if you're selling shares of your company based on the Bitcoin that you hold, then it's kind of hard to admit to people that they should wait a year before they buy it. You can't. Like it's literally illegal for him to do that because he's got to do what's best for shareholders. But it's just intellectually dishonest. And that part's always sat kind of weird with me. It's possible, right? There could be good reasons for it. There could be bad reasons for it. You know, maybe he thinks too many people, you know, if I say it, then everybody sells. But I hate to break it to you, Mike. Everybody sold, gang. Whether you said it or not. Every bear market's played out. Except you know, you forced your shareholders to sit underwater for a year when it's unnecessary. Bro, do you know what happens to MicroStrategy stocks if Michael Saylor starts playing the cycle? You imagine Michael Saylor sells off all their Bitcoin on October 6th at the top of the market. Just clears their Bitcoin. The next 2 quarters are flush with earnings. MicroStrategy up and to the right, right? Because you're cash rich. And then you use all that money from your increase in your shares to then buy twice the amount of Bitcoin, 3 times, 4 times the amount of Bitcoin you sold at the top. MicroStrategy shares go crazy again. But that is risk. Right? There's an amount of risk there that obviously he's not comfortable taking. And I don't blame him. With the amount of money that they have, they can play it just the same way they're playing. They're still going to be richer than us in the long run. I hope so, man. Maybe that's all he needed was to break the seal a little bit. You know what I mean? Like he's sold now. He realizes not the end of the world. People didn't panic. People have seen him sell and buy back more than he sold. Right? It's like almost like Satoshi, right? Like imagine Satoshi's wallet comes out and moves 1 Bitcoin. Everybody panics, right? But then if he buys back 10 Bitcoin the next day, then all of a sudden that fear is sort of, you know, aside from the fact that where the hell have you been for the last 15 years? But other than that, like Satoshi wouldn't even have to sell any Bitcoin. If somebody moved one single Satoshi out of that account into another account or onto exchange or something, anywhere, just moved it, period. We're getting massive red candles. Yeah. Yeah, it's the panic, bro. That's why buying the fear is such a good idea. You know, buying the blood while you're crying, I'm buying that type of shit. Anybody here have hoop dreams when you were younger? Anybody think they were gonna make it to the league?
Nope. I just played basketball, street ball, and stick ball every day.
There was a small period of time in my life where I thought I was on that path. And I got robbed. I got robbed of like 2 inches in height and a left hand. My left sucks, bro. I used to train my left every day, bro. I don't know what it is, but I just could not. Whenever shit hit the fan, I always broke right. It's so predictable. Nice, Scotty. Yeah, I got tall quick. Right? I'm like 6 foot on a good day. But I mean, by like eighth or ninth grade, 10th grade, like they were just shooting past me, bro. It was just surrounded by giants.
I definitely relate.
Yep, exactly, Monty. Yeah, that too. That too. Once I saw that the possibilities of that were starting to drain, I answered the call of the streets. Short kings. I don't know, man. If you listen to Instagram right now, girls are all about the short kings. Yeah, I think I was full hype by like 15, 16. Let's take a quick look at Poly Market to see if there's any last minute insiders.
Great idea.
Bro. Fed rate July. Still no change, but I think people are hedging. People are hedging with an increased bet right now. Right? When this got up to 95%, no change, the increased bet is really cheap at that point. You see it? It's like 0.3 or 3, right? So you could buy a 3 cent bet hedge your no change. That's what I would do. My big bet would be on no change, and then I would have a small hedge bet. Because if this small hedge bet, if that actually plays out, that's gonna cover the loss. You get what I mean? Because you're at 3. So if that settles at 100, if they raise it by 25% and that settles at 100, even if you had a small amount on that bet, it would cover your loss on your no change. That's why you never see any single, and there's money in that too if you're smart, if you think about it real quick. There's never a you never see any of those get to 100% before it claims. Right? Even if something is 100%, right? You'll never see it settle at 100%. And that's because even in short bets, there's always people taking cheap hedges. Now, what that means is if you know something's going to settle at 100 and it's only at 96, then there's 4% there. You know, if something's at 97 and you can quantify that it is 1000% going to end at 100. Rates is not this isn't a good example. A good example sometimes is sports games, or right. Sometimes the sports game is blown out to the point where there's no way that the person can, that there's no way they can catch up unless you're the Knicks. You know what I'm saying? But so usually those bets, people will take what they call the sure bet for a quick 3%, 2%, 4%.
Now that's an analogy.
Boy, there was plenty of people who took that easy bet, what they thought was on that Knicks game. Hey, how much time do we have now? 4 minutes. 4 minutes. All right, let me get my bot ready to give me my info. All right. Anybody's wondering how you get the earliest information on this? You want to go to federalreserve.gov. Do you want to go to Federal Open Market Committee? I'm down here to July. And then play the refresh game when you get close. Right? At that point, nobody on the planet will get the information before you. Five minutes left. I've got Claude refreshing this page for me, but I don't trust him yet, so I'm going to do it myself. Not that it matters. I just like knowing shit as early as possible. That's all. If there's a surprise, if there's anything but a pause, the candle will tell you. You won't even need to hit the refresh.
That sounds like a pause or a gain or both a red candle.
Either a raise or a hike is going to give you a red candle, in my opinion. One, you're raising rates that needs to be priced in. The entire market is pricing in either a pause and then an eventual cut. A cut means that you folded to Trump and that the Fed's independence can't be trusted. That also gives you a red candle.
golly.
Mm-hmm. Damned if you do, damned if you don't. The reason losing confidence in the Fed is a big deal is because people will automatically price in a recession. If you can't trust the Fed to keep you from falling into recession, those that don't already think we're in a recession, but if you can't trust the Fed to keep you out of a recession, then you have to price in a recession, right? Which means you have to circle the wagons and bring all your shit home. Just go in the search and put in Federal Open Market Committee. This shit reminds me of waiting for Jordans to drop and having to refresh the shop page. I have an auto clicker in here somewhere because of that from those days, just not on this computer. What we'll get when it comes in, right, is the statement in HTML or PDF form. And the second paragraph is what will tell you, right? Committee decided to maintain the target range, federal funds, and support, blah, 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 blah. All right, 1 minute. Here comes the volatility. Here we go. Yeah, it's going to be no change, but let's see what the language is. Decided to maintain the target range to the blah, blah, blah. Activity expanding at a slow pace, elevated, uncertain. Hold on. Let's take this. Let's compare it to all the other releases. All right. We'll let the market shake out. We'll watch the order book as it fills back in, and then we'll get to work. We're sitting inside psych ranges right now. Let's go down to lower time frames. Massive hawkish dissent vote. Yeah, this is going to be 9-3 vote is unusual as hell. All right, so Beth Hammock, Neil Kashari, Lori Logan voted against the pause because they want an immediate 25 basis point hike. This reveals a deeply fractured committee and very loud, hawkish minority that believes inflation is running too hot. It signals to the market that a hike in September is very much on the table. The biggest difference between this FOMC, I had Claude run this FOMC statement, right? Just the initial statement against all other ones in history. And the main thing it popped out was the death of forward guidance. Previous FOMC statements were notoriously lengthy, featuring paragraph-long caveats detailing exactly what economic indicators the committee was watching to determine the extent of additional policy firming. Forward guidance in this statement is entirely gone. The statement simply states the current economic conditions and ends abruptly. The Fed is intentionally stopping its practice of telegraphing every policy move well in advance. By removing forward guidance, they are forcing the market to react to hard data in real time rather than relying on forward guidance provided by Fed roadmaps. Told us he was going to do it. That means that this press conference, I'm not even sure there's going to be a press conference. We'll see what happens at 2:30. Let's just put it like that. I would not be surprised in the least if there isn't a press conference. Not in the least. Or if he goes up there for like 30 minutes, drops a comment, takes no questions. Yeah. Yeah, we go and it's like 7 special task force standing up there. It'd be funny as shit. That special task force is such bullshit, bro. He's literally just buying time. That's whole special task force thing was look, if we can push this shit down the road 4 or 5 months, maybe the war will be done by then. Then I won't have to make the hard decision. Yeah, they held rates, but they held rates in the most hawkish way possible. Yeah, there's enough gas to do it. Remember, these are the tops of our two visible ranges. And these are point of control. Right? Forget about what day it is, forget about all that shit. Just go right back to range trading. If you hold point of control, then you go back to your value area high. Right? If you can't hold point of control, then value area lows. Right? But you're sitting at your green value area low here. And you held point of control, your green value area high is right there. Right? Yellow value area low is down here. Point of control is right there. Top of it's right there. There's enough liquidations to get there. But we have sort of a smaller range here to contend with now. I don't want to clutter up the screen any more than it has to be. But you got tighter range that you're sort of inside of here right now. Something's wrong. Give me a second. Let me refresh this because, or maybe I should close some of these damn. That pink line is the top of the small range that we're in. So we need to break 65 to even think about 67. About that. 6-7. Somebody has to somebody needs to study the collapse of the whole 6-7 thing, bro. That shit disappeared overnight. Beautiful. As soon as parents started doing it, it was a wrap. The point of controls for these three ranges that we're in are these dotted lines right here. Right, so we've got a cluster basically. And these ranges go all the way back to 5-7 to when we dropped to 57. Well, what this does is that you know how those Fed minutes we're always like, oh great, we get to react twice to the same information. Well, those Fed minutes are going to be the only info we have now. Right? Which means we've got to wait 2 weeks before we know what happens in this meeting. That Fed statement they gave us was 2 paragraphs long. I expect that there's not going to be a lot of a lot of questions answered at this press conference if we even have one. Which means that when the Fed minutes come out, that's going to be the first time we get to see what was said. Problem is that we're always going to be playing catch up. But it is going to make that Fed minute day a volatile day, right? That Fed minute day should run exactly like FOMC runs. What's going on, Mazi? Bro, the debt bubble is the one bubble that nobody's talking about. The honest truth is that people didn't stop living the way they were living during COVID when the money ran out. They just moved everything to cards. Guys, you remember it was over a year now when we went to Google Trends and we sat here and we looked up car repos, sell my house fast, sell my car fast, I lost my job. Remember we searched all of those terms and they were at all-time highs. That was a year ago. Let's see, what are we looking at? I just want to see what the difference is from the spot book and the perps book. Yeah, we're seeing some filling back in on perps. Let's see. I mean, on spot. Let's see on perps. Bro, I already put it. I hate the way this works. Spot's filling in more than perps is, which is good. You would see it on spot, right? That's market maker starting to fill the book back in. But we'll see. See how long it takes for that to catch up. Right now, you can really move price for like little to no Bitcoin. It only take 400 and basically 500 Bitcoin to get above 654. If you want to get above 6.5, you need 373 Bitcoin. Break that. So with that, we come back and we take a look at the tape. Right? Do we see those whale buys that we need to see? Is it really? That's the one thing I didn't check. Wow. Hmm. With a four, with a 2% chance that it's a 50-point basis hike. That's nuts. Poly market right now must be. Watch this move on Poly. This is gonna be stupid. Where the hell did I put that? There you go. 1 second. Bitcoin's gonna eat back some of these. Remember, just volatility after the shit comes out. Give me a second. Hmm. Where is the other one that we were looking at? Why aren't you showing me the it's July? Bro, is everybody on Poly making bets right now? Is that what it is? I've never had this lag. Well, I could tell you from where the bubbles are, if they're accurate, that it's at 62%. I'll leave it on the side. As soon as that pops up, we'll look at it. We're at a little bit less than 50% of this vector if we look at the hourly. Or the 30-minute, I guess. Stopping volume candle on the 15-minute. We've got about 8 minutes to see if this is going to be a bearish engulfing or not. Yo, why is anybody else's poly market doing the same thing, or can you see the chart? If you go to Fed decision in September. Oh wait, I think I got it now. There we go. All right, so well, you can see when the what you call it came out. This is when the news came out. So you see the drop in no change and the rise in 25%. There actually might be some money to be made on this no change because this is emotional. This will go back and forth, but whatever. This isn't a poly market channel. You got to remember, y'all, there's very little forward guidance given right now. So it might take a little bit longer for people's favorite YouTuber to come out with a video explaining should they be scared or not. So you're going to see a lot of sort of back and forth volatility right now. I'll tell you right now, by going to Twitter, everybody just sitting waiting for somebody else to figure it out. To me, this is a very bearish pause, right? Very hawkish pause. You've got three of the governors, three standouts. There's always standouts, right? There's always people in the meeting that don't agree. If you notice, when Powell was in charge, he always came out and said there was a unanimous decision, right? But there were some dissenters, meaning that they voted for the final sort of cut or the final pause, but they wanted it to be known that they had some disagreements, right? This time, they're like, no, I want you to, I'm not only not going to vote for this, but I need you to put my name on the damn report. Let everybody know that I was not for this. I think we should have a rate hike. Like, people are standing firm, which is something that you don't see a lot. And that's going to be addressed at the meeting, which is why I think they're not going to take any press questions. We'll see. We've got 4 minutes, 6 minutes. Can you imagine that he leaves everybody in the press room just waiting and never shows up? That tape is lighting up, so I don't want to cover that tape, but what up? No, good people. Nah, I know, and this is some boring ass shit. But this is why, like, I wanted to do the deep dive and just explain this is. You don't have to be glued to it every single time like the rest of us nerds are, but this is one of the ones that's important. We're on the 1 minute right now, by the way, so don't freak out about price action. I'll bring this back on the screen when it kicks off. Should be any second now. Yeah, I'm not doing that. Yeah, I expect the bigger moves to happen during this meeting. Maybe I'm just being pessimistic. I'm not 100% sure that there's actually going to be a press conference. This is the first time in my life I've been able to say that and actually mean it. If he goes up there and answers questions for an hour and a half, 2 hours like Powell did, I will be shocked. Yeah, that's going to be bearish engulfing no matter what. Yeah, I mean, if I'm right, and that really was the domino that pops the bubble, then gold and commodities should start to get a ride until we're done with our bear market. My emerging markets plays, I expect them to do really good when the Dixie falls. You know, I've been setting up in emerging markets for months now. My drone plays should do really well if this war keeps heating up the way it is. So I'm setting up for a good final 2 months of this bear market. And sure. I would be 1000% okay with the war ending, my emerging markets plays going crazy, and my drone plays going to shit. If that means that there's peace, though. Just to be clear, I'm not a warmonger or anything like that, but all right.
3.75%. The committee is continuing its policy of making ample reserves in the banking system.
You showed up.
The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target.
Oh boy.
There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion.
Look at the tape.
We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago.
Oil went up.
Nominal and real yields are materially higher across the Treasury curve.
Oh my God.
In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit.
We're going
is,
down,
in my
ladies and
view, a
gentlemen.
change for the better, and we're just getting started.
Oh boy.
After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating.
Oil went
The
up.
most striking feature of the economy is the strong growth of business investment.
Oh my
The
God.
surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate.
I feel like we're in preschool
First,
and we're waiting
we
for our
talked a
milk
lot about
break.
the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed?
Like he's reading us a bedtime story.
Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks.
Oh,
The
price
business
increase
CapEx
is
boom, for
interesting.
example, is driving up prices of memory and logic chips
Not
and
oil.
associated AI infrastructure.
No mention of oil yet.
Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight?
Bro, why is he talking like this? I'm
Finally,
gonna crash
we
out.
discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them.
Oh, he sounds like he's reading a bedtime story. Like he sounds like a preschool teacher sitting on a stool reading a story to us before
taking
our
our
milk
question,
break
Mr.
and our
Chairman.
nap time.
You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave.
Wow, we're getting
in the
questions.
absence of forward guidance. I'm wondering if you could tell me what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare on our
Can you
words.
imagine if he talks
We've
like
pulled back
this
from
all the
forward
time?
guidance. So they're reacting
Like
to
at a
events, I
restaurant,
would say,
ordering
much more
food or talking to his
directly over
wife.
the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so
Sorry.
I'm sorry, it's your question. So interpreting markets is an imperfect business. We central bankers like market pros can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly.
We
But bond
don't
markets
doubt
say
that at
many
all.
of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw,
Here comes the
we saw
good
3
questions.
dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded?
He won't answer
by
that
them at
question.
this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get
Bro,
policy
answer
right.
her
That's our
question.
North
What did they
Star.
say?
So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price
Now let's see
stability.
if she's a good
I
reporter
wouldn't measure
and
that
she
path
holds
in
him to the
42 days
fire.
or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool
Oh my
CPI
God.
print?
Bro. You're going to let him fly with that answer?
So in 2 words, not much, not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. Suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
Good question.
There's a lot in there, Neil.
No, that was one simple question, brother.
Rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
Yeah, no shit, bro. That's literally your job.
Fight the last couple of days of you and the other 8 members who wanted to hold. Was that a strong conviction, or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions.
What?
The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers?
What is to my ear? What does that mean,
could
bro?
People come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
I'm going to start. Use that shit the next time you get in an argument with your girl. Like, you said so-and-so, like, to my ear.
Thank you, Colby Smith.
That's not what happened at all.
You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation. I tried to describe
she got him to answer.
My remarks today, a point that I made into the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference.
All right, new
So might it have
strategy.
been rational for
Colby
people to
asks
say,
all the
well, their
questions.
inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we've made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by
Oh,
how
he
we
likes
perform.
Colby.
And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
Oh, she's a savage.
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view.
Bro, there's
have a
nobody
better
else in the
judgment.
room right now except for
We're gonna
Colby
market
to watch right
pricings,
now.
trying to
Everybody
help
else
inform it
faded
too.
out. He just realized he's in a room full of people right now.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause.
What?
I would characterize what we did as a rigorous review
Bro,
of the
it was a
economic
pause.
situation. I would characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period.
Yeah, and then at the end of it, you decided to pause.
If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to
Oh, this guy is-
inflation data in
this guy
one
thinks we're
direction,
stupid.
strong economic
see how
growth
this is
in the
gonna
other
be.
direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now.
Lies.
I have not begun consideration with the incredible team here what would go into that document. I think you've characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with
I thought it
the
was a blank paper,
proliferation
bro.
of
Now
meetings
you've
and
got
press
big
conferences,
questions.
to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world.
This guy's a clown.
Put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and
give them time to do your job.
Time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Temeros of the Wall Street Journal.
Nick the
Chairman Bush,
snitch.
I want to follow up on
Softball
Colby's
question.
About policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that
Pre-written answer.
Either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative
Sorry,
orphans
I just
here.
felt like it needed some
I've been talking mostly
background
about price
music.
stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to
Well,
judge
there
just
is
that.
no capital expenditure on AI right now. That shit is about to drain out.
Was it about the inflation forecast, or was it something more?
How is there no
risks,
yen questions, no
the
Japan
tactics?
questions?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement
To his ear.
on objectives.
To his
and
ear, the
authority
dissension
and
was
commitment.
overwhelming
I didn't
agreement.
hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us. They weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves, how restrictive.
Sir, in your opinion, how does the collapse of the yen and the ongoing yen carry trade unwind affect capital expenditure when it comes to AI, and has the committee taken this into consideration? It's such an easy question.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we're saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer
It's
to
not.
the question.
It's not that the questions are bad. It's
when
that he's
some
just dancing
people that
around
follow
them,
the Fed
and the
say,
reporters want to
"Well,
be
we don't
invited
want your
next time,
forecast.
so they're
We
not
want your
holding
dot.
him
We just
to
want
it.
your reaction function. Part of me hears what we really want is your forecast. And what we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, where in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy.
We're not
In
in
more
crisis
benign
mode
conditions,
at all
it
right now,
strikes me
right?
as worth revisiting.
Oh, yeah.
But markets and market participants and reporters have learned to devour all that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Paul Weissman. There's a mic coming.
Thank you.
We don't want to control markets.
When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give two
Good
answers.
question.
First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more. But to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Michael McKee from Bloomberg Radio and Television. I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this.
Come on, keep it real, bro.
You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks.
Got him stuttering.
Looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty? So the decision we made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it. But I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If I were to steal a follow-up question, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks. But we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task force.
He stole your follow-up question, bro. You didn't hear him?
What vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather
he's not coming back.
than aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. the chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials.
He's going to wrap
of
this shit up
15
soon.
people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their
So
best
you put
view
all
on
your
the
friends on the
subject.
task force.
But ultimately,
Heard
these
you.
are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said
Oh, yeah. He's gonna
repeatedly you
end
have
soon.
no
They're
tolerance
turning on him.
for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses: impatience. Deliver it already. This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us, that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now?
Mm-hmm.
How does that feed into your decision making?
She's so scared.
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information, not a determinative source, not a perfect source. But if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys, but if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi there, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So
last
today,
question.
No change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see
It
if I
is
can
news.
offer some
I
clarity
didn't
on
think
that.
you would.
Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll.
He's got to tell. Let me see if anybody catches his tell.
To reform the way in which
He's got to tell when he's talking shit. I'd love to play poker against this guy.
Curiosity about that, so we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
Clown.
So he just filibustered the whole thing.
Look at his tell. He shakes his head. He always shakes his head no. Even if he's saying yes.
Reuters, nice to see you again.
Watch.
Chance of a rate hike. As they see now, how does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information. Not a determinative source, not a perfect source, but if we're trying to land the plane and deliver 2% inflation, this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received.
No, you haven't.
No doubt in some of your
No, you haven't.
commentaries today, you'll talk about a divided
That's a lie.
Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple of days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight.
Yeah, he's got a nasty tell. When he's talking shit, he can't help but shake his head no, like if he doesn't even believe himself. It's like it's like his subconscious doesn't believe what he's saying. Yeah, exactly, you said. Well, I don't really have anything to say about that.
This Fed chairman likes cookies.
I think you did a pretty good job from what it looks like in chat to reading through all of that bullshit. So
You see what I got out of it?
no, what?
Basically that they don't want to control the markets, and they don't want us to know what they're doing.
Or they know that what they're doing is going to affect markets negatively. So now conveniently they don't. That'll change though. All bullshit. It's such a dog and pony show. Talking about it's a blank paper what he's gonna say in Jackson Hole, and then goes on for 20 minutes about the grand plans he has for what he's gonna say in Jackson Hole. I mean, he's not lying. I'm sure that the Bilderberg steering committee hasn't given him his speech yet.
He's kind of in a tough situation though, man. He can't really put out his plan without like talking crap about the previous.
That's never stopped anybody though. I think
He
the
doesn't
problem is
seem
that
like-
he doesn't, they literally don't, he can't, in the current environment that we're in, he can't announce his plan. Right? But the point is that there's a plan. There's a plan, and he's going to, no matter what happens with them with the economy, they're going to go through with their plan. They can't talk about their plan, right? They can't give forward guidance on their plan when it doesn't make sense, because then you get questions like you did from Kobe and the dude from that poor lady at the end, bro.
She was scared, dude.
Holy shit, that poor lady at the end, bro. Like, the question was, she was emboldened by the question before her, right? When the dude was like, "Okay, I'm struggling with this shit," and he's old, he'll still be there, even though I said he won't be invited. He'll still be in the room because his newspaper has enough pull. Whether he'll get a question answered is another question. He'll probably just sit there for the rest of the year in the back. But she doesn't have that same luxury. And when she started prodding, you could almost see on her face when like her survival instinct kicked in and was like, "Girl, this is the first meeting, we got a long," but yeah, it's interesting.
She's thinking of her children's future.
I told you, my question would have been simple. The second he said anything about CapEx, right? He's talking about capital expenditure. Basically, as soon as corporations stop spending money, right, on AI, then they'll consider what needs to be done, blah, blah, blah. My question would have been simple. The yen is at a 40-year low. The dollar's at a 40-year high, right? Rates are going up in Japan. People are already exiting to pay their yen carry trades off. How do you feel that the unwinding of the yen carry trade affects capital expenditure? And do you feel that it's your job to get in front of that? Simple question. Literally every newspaper that's in there, every one of these reporters works for a newspaper that did a story on the yen carry trade this weekend. Every single one of them, top stories. Not a single question was asked about it.
Yeah, that's amazing, dude, because that's kind of everyone's talking about.
Bro,
that
how can you even rely on capital expenditure when that capital expenditure is literally stopping, reversing, and coming out to pay for these? I mean, we're not going to talk about what the NASDAQ did today. We're not going to literally none of this shit came up. So I think that the reporters were first of all, I think that they weren't even sure he was going to walk out. And then they were all on softball mode. There was a couple of them that let loose. Kobe did it, but she did it with a smile and a grin. And I think Worst likes her because that was the only clean answer that we got out of him. But she didn't necessarily double down. And there was a lot of people who got their answers completely just bullshitted. And they had follow-up questions, and they used their follow-up question on some bullshit instead of saying, "No, excuse me, you didn't answer my question at all." Like that one girl literally came out and asked him, it was 9 versus 3. Can you categorize the argument from the 3 and then tell us why you decided against it? Simple question. Exactly what everybody wants to know. That question was asked to him 3 times in 3 different ways. And the last time he finally said, "Well, I'm going to let them speak for themselves, but to my ear." Like, what is this to my ear bullshit? Anytime somebody said, "Hey, what was up with the disagreement?" It's like a historic disagreement at the end, 9-3. Like, we don't really see that. Well, to my ear, we had agreement and everybody was agreeing and it was so agreeable. Bro, what about to somebody else's ear? Like, can we get somebody else up here then to talk to? Because I told you we were gonna miss Powell. Y'all thought I was playing.
I didn't think that. I mean, I'm with you, man. I mean, I was worried about it. I mean, what do you do though? I mean, the first 2 months that Trump was back in office, he was already complaining about him. Like, I don't know. I feel like now we just got a yes man, and now we're just gonna just we're gonna either kick the can down the road or we're gonna make it worse.
I'm starting to feel a little worse than it's just he's got a plan and da da da. I'm really starting to feel like this dude has no idea what he's doing, and the decisions are being made above him. When he said they asked him what effect interest rates would have directly on the lending that leads to, I can't remember what it was specifically, but he literally out of his mouth said, I can't really sit down here and break down exactly what the effects would be for blah blah blah. I'm like, bro, you're the Fed chairman, bro. What are you talking about? Like, you should be able to sit here and talk for 3 hours off the top of your head on any of these topics. And it wasn't like he didn't say like I won't talk about it or I'm not going to give you the forward guidance on it. He's like, I'd be wrong. Like, I wouldn't be able to. Bro, first of all, how do you admit that to the world? Anyways, I'd like to see what happens to bond sales over the next week after that speech. I can't imagine people holding 30-year bonds are feeling very comfortable.
Yeah, dude, I shifted my portfolio, I don't know, a month ago, and I look, dude, if the Dow goes up, yeah, I don't go up with it now because of it, because everything's in stable funds. But dude, I'm not gonna ride this down this time, man. I did this crap last time. There's no freaking way. I'd rather my account grow slowly than dip 30, 40, 50, 60%. I'm so sick of this. Like, look, dude, we all know that um, the dollar is going poo poo and we're losing world reserve currency status. But this Japanese thing, which I know that you've talked about before,
Yeah.
just snuck up faster than I thought.
Yeah. Nah, hell nah. I do not need that pressure, Muzzy. I'm good. They'd take me out of there so quick.
So what now?
Now we see if this bear flag plays out and they take this liquidity. So far, I say is a decent midweek reversal. We've literally just gone sideways. Right? If we just consolidate, then that's what we got. These are the type of numbers, like these type of days are the type that can shift midweek reversal from Wednesday to Thursday. But downward direction of the week has been down, right? So if we take this out, let's go bigger time frame. We're stacking up downward measured moves, y'all. Same way how when we were here, we were stacking up all those measured moves to the top side. We're starting to stack these. They're not very far from each other. And it's just giving confluence to this range.
Do it, market maker.
And that's sort of what our macro looks like.
Is that in Chinese?
Yeah, that was when we were looking at yesterday. If you guys didn't see the deep dive yesterday, but this is the Chinese He's basically the Chinese Nick the Snitch. He's like the Bank of Japan Fed whisperer.
Yeah.
And he's been warning us for quite a while. Like, look, this is one of the freakier ones. This is the first post on like the 8th. The measures being prepared by the Bank of Japan will affect the lives of billions of people. To the people of the Western countries, I offer my deepest apologies. This is not a personal matter. May God's blessings be upon you. And then the next post was when he announced the yen stablecoin that gives you yield like 2 weeks before it came out. That's when everybody started paying attention to Yudo. And then that made his first post like, oh. Then his third post says, Tokyo is being forced to make the ultimate choice to end Japan's era of low interest rates and rebuild the nation's wealth, or continue yielding to current pressure from the United States at the expense of Japan. History will remember this moment as a time where everything changed. And then his next post says, Japan's wealth is returning to its homeland by any means necessary. The Bank of Japan has so decided. This is before any Bank of Japan messages. Like I said, he's like the Nick the Snitch of the Bank of Japan, basically. And then his last post. Article 589 will be cited far more than you can imagine. Foreign borrowers shall not assume that past approvals guarantee future funding. A warning to all borrowers who think they can continue to refinance through Japan. Now, there is some argument over whether Article 589 has that power, but the Bank of Japan recently talked about it themselves. That was in the deep dive. But basically what they're saying is if this yen trade unwinds, or when it unwinds, it's not going to be like before where it just starts back up again. Right? The era of you being able to come over here and pick up a currency on the cheap and get a better yield for it in the West, it's coming to an end. Dramatic, I know. Well done. One.
Yeah.
Susie?
So basically, I did nothing. I just stayed in my shorts and TP'd on my stock trade.
Nice. We're trapped right here between, these are 4 different point of controls. Right, from ranges that spread back to 2 days ago to back to when we went to 57. Nah, I haven't really looked at anything. Damn, I gotta get rid of some of these. Damn. Popped up. Nice. This thing was dead in the water. Look at that volume. I mean, I don't blame you. Look at how far past Bear market lows we are. Well, actually, these were bear market lows. That's how long it's been since I looked at this chart.
Dang.
That's got to be 99%.
Average altcoin.
$98. 7% drop. What's the news? There's got to be some news here. Cardi to hold live stream on X on July 14th. Nothing crazy. No real imbalances. This has to be news driven. I'm curious though.
Cardi.
Whack.
A privacy chain. Privacy for any chain.
It's just whack that I mean, like, this is so
Yeah, whatever.
overdone. You know what I mean? 6 hours ago,
Seriously.
tops the list of most viewed coins. Yeah, because it's flying, but why? Sway.
Why do we need so many privacy coins? Like we have Zcash, we have Monero, we have CoinJoin, we have Tor.
Go to the comments, son. It's pointless. Seeing a huge number of well sell orders on Cody, yet prices going higher. Oh God, this guy. Yeah, you gotta love Twitter, bro. You see this douche? I think I have a pretty strong idea of what's happening here. So then somebody in the bottom goes, "What's happening here?" I can't share insider information publicly anymore. It's against the rules. From now on, I'll only be available for my VIP channel members. Thank you. Oh, so then you'll share insider information in your VIP channel? Stupid. You should delete that ASAP. So Cody is pulling a crime pump this month. Exactly. %13 of the supply. Yeah, somebody's running a play. I mean, that doesn't necessarily mean stay away from it. It just, to say the least, it's not natural price action. I mean, it doesn't look crazy as far as structure goes.
Indeed, does it look like Tesla is almost on a free fall? It's like trying to break like the 300.
Yeah, I looked at Tesla earlier. It didn't look great.
Oh, you already did it. Oh, my bad.
Nah, you're cool. I'll look at it. I gotta check it anyways because
Yeah, it just
little
broke
girl gets
300
me all
and
the time.
it's been trying to break it for a while, but it seemed like that was something that was an interesting level.
300
Yeah,
on Tesla.
it just broke 300. It was trying to break it a few times. I think the last few days, getting close to it, but always bouncing on it, and now it finally broke.
I used to
Yeah,
trade
we gapped down nasty. My squiggle for this. I'm looking to start DCAing Tesla like underneath 250.
Tesla's probably my favorite to swing trade when I was swing trading.
I'm a buyer in the low 200s though. I want to get in my opinion, just my opinion, this is will be seen in the future as pre-acquisition Tesla. And before SpaceX announces publicly that they plan to acquire. So I do want to buy the dip on Tesla because the news should pump. And there's a couple of areas of interest for me. Right, logarithmic uptrend brings us into that DCA. And then non-log brings us into buy zone. Either way, I think this support would be strong enough to hold price. But let's see short term what's going on here. Yeah, it's breaking structure. It's not yeah, you're just stacking up order blocks above. I mean, you are due some mean reversion here. Feels strong short though. And like I said, you're breaking structure. I'll wait till this candle closes in 2 minutes, but Might be saved by the end of the bell, literally, but aftermarket is going to be kind of nasty on that, I think. Let's take a look at NQ. Had a little bump up while he was talking. Gave it all back. Let me clean this up. Got a little bit of support to hold on to just from some of this chop here.
Is Bitcoin now at the line that you say us? Because it's dumping a little by little.
Yeah, probably. Give me a second. Yeah, it's a nasty 4-hour candle. Right into that order block. We're still chilling on Bitcoin.
It's coming close. Dump it, baby.
Got your M pattern right here.
I like so much these dumps, bro, when I have short.
Of course. It's got to absorb that demand. At the top of this range. Just remember, support is support until it's not. Sweep, sweep, sweep.
Yes. Keep walking, baby. Calm down.
He's had a bad bear market, bro. He's been raging against the bears since November. Value area low, right, from this range. So we still need to break that as well. Price hold value area low. You expect price to come back up to point of control. We also have vectors all the way up from point of control. So when you go to the 15-second, we can map out this little mean reversion. And we're talking mean reversion to clear these vectors, point of control, 50 EMA. A test of the break of that M as well. Now, there's not a lot of meat left on this bone, in my opinion, to take a long here. If you're taking a long with the possibility of grabbing all of this, yeah, but that's not. My roof is somewhere around here. We put a little W pattern up into that range. And the most micro level, like we're on the 15-second right now. But even on the 15-second, rules apply. What did we hit? 382. What does that make that? W fractal on the 5-second or the 1-second. You're gonna let me draw this measured move out, market maker? Or you're gonna like chill out for a second? All right, so that little point of control run is basically all I would look for here. Came up, didn't take the whole measured move, came back down. If you pull this to those highs, oh, sorry. If you pull this to those highs, then we watch to see if we break golden pocket. We break golden pocket, then the fractal is done, and all you got was that 637. We hold, and you fractaled into a bigger W that gives you the measured move to the actual point of control. 0.5. Golden. See, it's just not worth taking longs. That's an invalidation of your first W. And you're past the possibility of your second W, so you'd be looking at basically double bottom or a sweep. You're in double bottom territory here already. Measured move still would take you to point of control, but it doesn't have the same probability of breakout as a W at golden pocket or 0.5 would have had. Again, not enough meat on the bone to take the trade, in my opinion. For me, I know some of you 250x leverage guys might disagree. And climbing, yep.
Sweep all the down thing, baby. Sweep it all.
You formed a new range here. All right, so if you really want to micromanage it, Again, double bottom measured move would give you old point of control. It's a casino, bro. The real question is, why wouldn't they offer 500x? Why don't they offer 5000x leverage? And people dumping those long dated bonds, bro. Nothing about what he said makes me feel warm and fuzzy about holding 30-year government debt. He basically said we're not going to give the markets any forward guidance, but we're going to let them decide how this ends up. Good luck. Value area low, point of control, back to value area low. Again, we're on the 15-second chart here. You know, it doesn't feel like it, but it is. Gold should have got a pop. Yes. Yeah. Let's see. Silver should have got a pop too. Yeah, a little bit. Right, popping for the wrong reasons. Yeesh. That's crazy, bro. US 30-year mortgage. $20 years above 5%. The 10 years freaking out. 10-year gets above 5%, we're risk off. The appetite for risk disappears. Why would you risk anywhere else when you can get 5% for the 10-year? All right, we're still inside that range on the 15-second. Support is support until it's not. That's what 65 Bitcoin bought on market gives you. Bottom of the range holds, point of control. It's just because high def's not here. That's why you guys feel like that. Yeah, we had to come down to the 5-second. I was falling asleep on the 15-second. $114 Bitcoin sold on market, and it's getting absorbed. We're just dealing with this order block here to get that pattern measured move. This is that absorption that we were talking about. Doesn't really take a lot to push price here as far as the book.
Those sweet scandals, bro. Big fat red, I mean.
It really does not cost a lot to go up here. It could be setting up at least a mean reversion. Put it this way, if we don't go up, then there's really no buying pressure at all. Remember, the book can stay there forever until somebody comes in and actually buys. See, look, 35 Bitcoin gave you that green candle, right? We just saw 100 Bitcoin sell, gave you a tiny little red candle. That's what the difference is when the book is light. If the book is thin, it doesn't take a lot of Bitcoin to move it, but you have to have active buyers come in. I wouldn't doubt that some of that is Japan continuing to dump their bonds. Give me a second. I'm gonna grab something to drink. I've been yapping. I'll be right back.
Mike checker.
Yes.
Thank you, thank you, thank you.
How you looking at, bro?
I'm here, y'all. I just got some people over and they're dumb loud.
What do we got? What do we got? We'll breakdown action. Mr. Fed ain't trying to tell us nothing.
Oh, Drew is open live.
What's up, man? Copy.
Shazam! Shazam! Shazam!
What's good, y'all? My bad. I just had a vibe out for a minute. I'm paying attention, right? Mouse TA was pretty easy. Small W at the type 2 of the larger W. Even larger W threatening to fill out if we come down. 50 EMAs, 382, 800 EMAs, 0.5. SR flip is golden pocket. The chances of it continuing way higher if we fractal. If we don't fractal, we're gonna get a bigger drop here at some point, whether it's psych high or at the end of our purple liquidations. I would prefer to build structure now, so that when we run down out of liquidations, we don't have to come down all the way to these ranges and we can just hold. But for that, we're gonna need to build resistance here. Well, I mean, unless you're short. But if you're long and you want to get the best move out of this, for me, I'm going to look at the intentionality of it. If we sweep without building structure, the intention isn't to continue. If we build structure, then the intention is to continue, or they wouldn't be building. Market maker wouldn't bother building structure. Whales don't care about building structure. When whales are running the show, they just want to run it. They plan on TPing anyway, so it doesn't matter to them what happens after. Same thing I've been looking at. Double top, lower high or a double top. This is just part of our midweek reversal. AKA everybody that's scared went to sleep. What happened?
Oh, when you're saying you're going to decide about building structure, were you talking about where we are currently?
Yeah,
That
coming
we're having
down. Yeah, retracing now to put in a type 2.
Okay.
To build structure so that when we come down, you're not coming down through a steep V shape, right? You're coming down through structure that's already been built. So there's something to catch you.
So if we build structure, then chances are we're not just going to sweep, but we're going to go higher than that.
If we build structure, the intention is to go higher, yeah. If we don't, I mean, you don't really need to build structure if all the intention is to grab this liquidations and that's it. Because it doesn't matter if you plan on going down afterwards anyways, why waste money and time building structure? Right, so if we see market maker building structure, then you have to assume that the intention is to continue upwards. For a longer period of time. Excuse me. Basically, the difference between a lower high and a double top.
Okay, so you're saying it's going for a double top if it builds structure.
Basically, yeah. Which was what, 66, 7, something like that.
Oh, okay.
But that's a multi-day process. Right, if we were to do all that.
That would make sense though, because often after a good or bad FOMC, the price will move the opposite direction for a few days before it
Yeah.
chooses the final action.
Look at
I need to get on my
look at the ranges that we're in. Right? All three of our ranges are right here. Let me change the color to this. All right, so look at these three visible ranges, right? The widest one is our blue range. That's where we held. Right, so we held value area low, and then we went to point of control, which is point of control here. I want to know exactly which one this is. Okay, it's up here. Right, so we hit point of control. I mean, we hit value area low. We know that after hitting value area low, you go towards point of control. So we started moving up towards point of control, but then we hit our green zone. Right, our green zone here, we came down and we held the bottom. So we were accepted back into that range, making this just a deviation. And the green zone point of control is also up there. Right, those are the two. Yeah. Right, so the two larger ranges, their point of control is all the way up here. This smaller pink range that we were in is what we're trying to break now. Right, came to the bottom of the range, went to point of control. Now we're at the top of the range. If that doesn't break, or if it breaks and it gets accepted back into the range, then we're coming back down. So what I would like to see is for it to reject the top of the range, come down to point of control, right? Create a second W to fractal out of. That way, when we do inevitably, in my opinion, reject off the top of our ranges, right, let's say we get this W, comes down, right? Which gives us a big SR flip right there. Right. And we also have point of controls here. So it's sort of like an insurance policy. Price comes down and pops up and goes to that and rejects, right? And comes down and doesn't hold point of control. Instead of having to come all the way down here to the bottom of the range because of it, we'll have some sort of support. Right? So it's an insurance policy that gives it something to hold on to so then it can actually try to make that 6, 7, whatever the high is. What was the high? I don't remember exactly. But we topped out.
Great, because then I could get out of my shorts at a better time and re-enter higher.
So we try to get in front of these things so that you can like future trip a little bit, you know, but always knowing that obviously anything could happen. All right, so this is our high. This is our local high. Let me drop it so I can remember it. Remember when we lost 635, said the chances of us rejecting off of 70 are in the possibility, not the probability list now. Right, the highest probability would be a double top. Or a lower high.
I've been in in these shorts since I switched exchanges because I was very discombobulated. And I didn't want to miss going down after trying so hard.
No, I feel you.
So I made some bad decisions again, like like I have been lately. But I mean, I'm not even mad at myself because it was a lot. I did, transfer everything. And
How much of a break did you take after you transferred? Were you trading like that same day or?
oh no, as soon as the
Because I
money
know you
hit,
were
when
stressed. I know you were stressed out. Like you were already on tilt because the money wasn't landing, and then you were worried about that.
Yeah.
Yeah. It's
Yeah, I
hard to
really
not
need to
trade
collect all this.
sometimes. Yeah. It's a
And
little
I,
bit of break
I've,
time is really important when you're upset. Even if you think you can
I've been
handle it.
trying so hard, you know, that to get into this short, and like I was just, my mind was fried, and the only thing I was thinking is if I miss it after all this, you know.
Yeah.
But yeah, now that I've had some time to think, I want to get out and reposition. Take that risk. I mean, honestly, to me, it looks like it's going up. It's been looking like that for hours.
So, in my opinion, if we do go up without creating structure, I don't think that we have enough juice to get past the top of our flag, which we're in. Right, remember this, the big range that we were in for all this time. Which means that that trip down is going to be very quick and violent. Be nothing to stop it except for maybe a little bit this like high. But if it holds, if it fractals, I mean, that measured move up here, somewhere around half of that measured move, probably this midpoint, will come down and will fractal into a larger W again off this top. That's when I can sort of be sure that they're going to go for something a little bit higher than just the value areas. But there's a lot of work between here and there. And I need to see market maker involved at like every step.
I don't know. It's
But
not
that's what I'm
looking
looking
like
for.
it wants to come down.
Nah, it isn't. It's looking like they're going to try to run it. And it might not even be market maker. I mean, let's look at the volume because sometimes market maker might want to slam the brakes on, but you know, the buy pressure is just there. So there's nothing you can do about it. But I don't feel like there's a lot of the tape is dead. I don't really see a bunch of like well orders coming through. So this has to be intentional. Like I said, it just speaks to what the motivation is. We could want the shit to go up all we want, but if market maker's not on board, at least in the short term, then he's not going to spend any money trying to secure a longer move. There's some action coming through. It's not a if but when, right? Like it's going to retrace. It's just one. Everybody does, Monty. If not, we'd be bots. Yeah, it's only so much. Especially like on extra stressful days. Let's see, do we got any players yet? Passive side. It's about 1,000 Bitcoin, give or take, at 65 to like 65 too, but that's about it. Nothing crazy. This guy's still sitting there with that 700 Bitcoin though.
Why are the purple lines or squares flashing?
Those are just orders being put in and removed. Right, so 375. Once they're a certain size, it's colored a certain way, right? So it's just orders coming in that reduce the size of the order to where it doesn't show, right? Or it goes to like a darker purple.
So is that pretty common right at price action?
Yeah, yeah. Yeah. People who trade with their finger hovering the mouse.
This code is pumping again. CODI.
Mm.
Yeah, no brain this thing.
Are you in the 15-second?
Nah, this is the 1 minute queue.
Oh, I see that now.
Starting to get a little bearish channel-y up here. Least favorite topping signal. Be nice to break that as soon as possible. Yeah, sorry, brother, diagonally. Remember that those are resting orders. Those are resting orders on the book that get filled by those active orders that come through in the candle.
Well, Ada's built a little structure, topping structure that'll bring it right down to the type 4. Something close to it anyway. So maybe some others will follow. Maybe your Chris on.
I think so. Is my TV playing in the background or something?
It's coming through in just a little burst, but yeah. I don't know if YouTube can hear it. I have your stream up, so sometimes you can hear things differently.
I'll put it down. It's just white noise in the background, anyways. Mine. You got a W in here, but slow breaking W's create bear flags. Measured move would take you to psych high if it pops. I think they're gonna want to build some. They're gonna want to build some liquidations to cover that gap. Let's see how much absorption we get the next time we try to go up here.
I'm gonna go get some food started and see what it looks like. Staring at this isn't really.
It sounds like a good idea.
I'll be back.
I mean, nothing. You get some absorption by the bears, but nothing crazy. I wish they stopped making this order book so small, though. I don't understand why I can't. Okay, 645, 648. What if I turn it to? No, it goes back. Mine was acting crazy earlier, but I mean, it should be. I've got so many trading view tabs open. I just figured that's what it was. I didn't even try to figure out what the issue was. I just looked at my tabs and was like, yep. Little more absorption. Well, look at it like this. First of all, we are aggregated. Okay. Well, yeah, it's thinner than it is to the top side, yeah, for sure. It would take you 530 Bitcoin to get to 66. 300 Bitcoin would get you to 63. Or just look at the candle itself, right? Like, find the last green candle. It's about 2 Bitcoin. Roughly the same. Put it on 100. Yeah, but it should let you. I don't understand why they're not letting you scroll now. Like, I should be able to scroll all the way up to 70 and see what's sitting there. And scroll all the way down to 60 and see what's sitting there. But I don't. Keel's just always changing shit. Does it scroll? Or maybe sync the chart being on? No. Okay. And actually, I should keep this up though. Spot. Let's go spot. And so we could have spot and perps. There we go. Now we found the money. But you're still not letting me scroll. What's going on, Pre? We got some absorption here, right? They bottom blasted that candle with 4 Bitcoin. And it was absorbed with only 2. That's not a good sign. You saw how much Bitcoin they threw at this candle to get that wick? think we lose this better structure right now. There's a retest of the 50, but just do it. This spot order book is just too small to matter right now, honestly. There you go. And you see that level of absorption, y'all? Right? Remember we talk about effort versus effect. When you see that attempt at pushing a red candle and you can't even flip it green, right? That level of effort, and that's the effect you got from it. And then you start to see those next candles be blasted, right? With no absorption. Which one? The order book? It's just the order book. There we go. They let me scroll, huh? That's what I should have been on the Dom the whole time. Since I could scroll, shit. And we should be on that way down to that 50. There we go. Let's see what we get fib-wise to see if we're actually building structure. We gotta adjust this to the top candle. And that's why we watch the order book to try to catch that top pivot, right? You're looking for that big push, that level of absorption that just they can't get past. At that point, you end up getting a little small capitulation. I'm leaning bullish, but I need to see a build structure, right? So I need it to come down. Sometimes when you're bullish, you're rooting for it to come down, you know, instead of just V-shape uncontrollably. If I see a nice strong reaction off of, honestly, the only real level of, well, 382 and golden pocket would be decent. But if I see some volume come in, more, actually more than volume, if I see some aggressive orders come in, then I might add to like a type 2. Where was that? Where was that Bible? Did you move it now that we need you? Oh no, it's way down here. 62. There's a level of interest though, right at 6.4. 6405. Which I believe was, yeah, 5. All right. Let's see. My bad, Joe. I'm just talking to myself. What I want to know is where my rib tips at. That's what I want to know. Give me a second. I'll be right back.
What's the deal? $38 smash. This dude, 38 smash. He sound like he's from the South. He ain't got nothing on Jada. Nah.